So I actually told that the live will be at 2:45. So still no one has joined. Let's wait for 4-5 minutes and we'll start. Yes, I guess some people have joined. Good afternoon. Let me know whether my voice is audible. We'll just wait for another 2 minutes. 2 to 3 minutes we'll wait and we'll start. Yes, my voice is clear, right? Okay. Had your lunch, everyone? We'll wait for 2 to 3 minutes and we'll start. So in the yesterday's class, we have revised chapter number 1, if you remember, right? Yeah, good afternoon. Today, our plan of action will be to revise chapter number 2 as well as chapter number 3. Two chapters will be revising in the today's class. So if you see what are those chapters that we are going to revise in the today's class, chapter number 2, which is ethics, terms of audit engagement. Basically, if you see in your ICAI study material, this second chapter will be given as the last chapter, 11th chapter. Basically, in order to understand all other standards, it is very much important for you people to know or to understand what is engagement letter and what are the terms of audit engagement. So without understanding that, it you cannot understand the remaining concepts. So the correct flow is to first of all discuss ethics and terms of audit engagement. So what I have done is, in my discussion, in my list of chapters, I have brought that 11th chapter to second chapter. And if you see the weightage of this chapter, this is this chapter, it is having a very good weightage. So 8 to 10 marks you will be getting from this second chapter. And today we'll also be covering the third chapter. Third chapter, basically it is nothing but SA-300 audit planning chapter is that one. So audit strategy, planning and execution, completely SA-300. That as a third chapter we will be revising in the today's class. Again, this third chapter is also having a 8 to 12 marks weightage. So in the yesterday's class, already we have covered 4 to 6 marks. Today we will be covering roughly around another 20 marks, you can say 20 to 25 marks we will be covering. So almost in the yesterday's class and in the today's class, we'll be roughly covering 30 marks of content revision, right? Yes. So shall we start revising second chapter? Everyone ready? Let me know in the comment section. Shall we start? So chapter number 2, which is ethics and terms of audit engagement. Sir, what are these ethics, sir? If you see, ethics are the moral principles. These moral principles, they will change from person to person. So a particular activity which is moral for one person might not be moral for some other person. Similarly, morals will also change from society to society. A particular activity which is moral in India might be immoral in some other society like USA. Let's say for example, uh, to have two or more wives is quite common in a society like USA. So there it is quite moral. But here, if you apply the same situation to Indian society, if a person is maintaining two to three wives, it will be considered as immoral, right? So morals, they change from the society to society. So ethics are nothing but the moral principles which comes to the individual intrinsically. So based on the upbringing of the individual, in which type of society he has been brought up, based on that his moral values will depend, and they can be inculcated in the habit of the individual. So you can inculcate good morals. So your parents can, while parenting you, they can inculcate good morals in you. So it is a habit of individual, and it is also state of mind. Got it? So that is a basic understanding of what is meant by ethics. Now, if you apply this same concept of ethics to the profession of chartered accountancy, we will be calling it as a professional ethics. Understanding, not only chartered accountants, each and every professionals, they will be having their own ethics. Doctors, they will be having their own ethics. Lawyers, they will be having their own ethics. So just like that, even chartered accountants are also having certain ethical requirements. Who has issued these ethical requirements to chartered accountants? Of course, ICAI has issued certain ethical requirements to the chartered accountants, right? So you need to follow those ethical requirements. In the yesterday's class, we have discussed in SA-200, there are fundamental principles which have to be followed by the chartered accountant, right? These fundamental principles are nothing but the ethics only. These, the discussion about these fundamental principles has been made in SA-200, and even in the code of ethics, the discussion about these fundamental principles has been made. I told you yesterday, code of ethics is a 3 volumes of books that has been issued by ICAI. So as discussed in yesterday's class, there are 5 fundamental principles, or the 5 ethical values that the chartered accountant has to comply with. What are the basic things? Integrity, objectivity, confidentiality, professional behavior, professional competence, and due care. I have already explained these things in the yesterday's class as part of SA-200. So I will not be detailedly covering these things again. Okay, because we have a lot of things to discuss in the today's class. Next, principle based approach versus rule based approach. Now ICAI, it has issued certain ethics and told the chartered accountants to follow these ethics. Now for following these ethics, there are 2 ways available. You can follow either principle based approach for complying with these ethics, or you can comply those ethics through rule based approach. Sir, what is this principle based approach? What is this rule based approach? I'll tell you with an example. So let's say for example, you know, as on 31st March of every year, physical verification of inventory has to be conducted, correct or not? So as on 31st of March every year, physical inventory verification has to be conducted, and for that physical inventory verification, auditor has to attend, correct or not? So this is a rule that has been prescribed. Now here, by conducting physical inventory verification, auditor will obtain audit evidence about the value of inventory that is existing as on 31st March, right? That is the purpose. Now, on 31st March, management is conducting physical inventory verification, but there was a huge flood. Okay, there was a huge rain and completely it is flooded, and it is flooded so much that auditor cannot visit the location of physical inventory verification where that is being conducted in the godown of the company. So auditor, he is not able to attend the physical inventory verification as on 31st March. Now if let's say auditor wants to comply with this requirement by following or by using principle based approach, okay, principle based approach. Now there is a huge rain and huge flood, auditor cannot go as on 31st March as prescribed. So here what is the principle? The principle is you need to obtain audit evidence related to inventory on 31st March. So what auditor will do is, after 3 or 4 days after the rain has stopped, after the flood situation has stopped, let's say on 4th of April. So on 4th of April everything is normalized. Now auditor will go to the godown of the company and he will again conduct the physical inventory verification. Okay, sir. By conducting physical inventory verification on 4th April, auditor will get audit evidence about inventory that is there as on 4th April. But as per the rule, auditor needs to obtain audit evidence as on 31st March. Inventory that is present as on 31st March relating to that auditor needs to audit evidence. Auditor needs to obtain audit evidence, right? So now what auditor will do is, auditor already having audit evidence about inventory that is physically present as on 4th April. Now for this physical inventory that is present as on 4th April, what the auditor will do is, auditor will reduce all the sales that has happened, sorry, not reduce, auditor will add all the sales that has happened from 31st March to 4th April. So from 31st March to 4th April, whatever the sales has happened, all that sales auditor will add to the closing inventory as on 4th April. Similarly, whatever the purchases that have been made from 31st March to 4th April, that purchases auditor will reduce from the inventory as on 4th April. So by doing this, auditor can obtain audit evidence about the inventory that is there as on 31st March. Correct or not? Now if you observe here, auditor has not attended, auditor has not followed the exact rule. Okay, he has not attended on 31st March as prescribed, but auditor has achieved the underlying principle. What the underlying principle is saying? Underlying principle is saying you need to obtain audit evidence about inventory as on 31st March. Whatever the process you follow, you have to achieve this principle. So by following this process, auditor has achieved the principle that is prescribed. So this is called as principle based approach. Understanding? Let me know in the comment section whether you understood principle based approach. Now going to the rule based approach. Let me know in the comments. Rule based approach. Now what is meant by rule based approach? If auditor is following rule based approach, what the auditor will do, you know, whether it is even though it is raining as on 31st March, even though it has flooded on 31st March, auditor will not listen to anyone. Auditor will become balaya. He will go on 31st March only. He will say that on 31st March only rule is saying to go. So I will go on 31st March only and I will conduct the physical inventory verification. Like this auditor will say, if he is following rule based approach. Understanding? So this is the difference between rule based approach and principle based approach. Getting it? So see, principle based approach. In case of principle based approach, auditor will comply with the spirit of ethics. He will not try to follow the same procedure. He will try to achieve the underlying purpose. Okay, and he has to exercise professional judgment. So in order to achieve the underlying purpose, how can I achieve it? He needs to exercise his professional judgment for applying principle based approach. Whereas in case of rule based approach, what will happen? He will strictly follow the rules, like Balaya, I won't listen to anyone, right? Next, there is a narrow outlook in case of rule based approach, and it is very rigid, right? So this is the difference between principle based approach and rule based approach for following the ethics. Got it? Any doubt? Let me know if you have any doubt. Next, okay sir, you are saying ICAI has issued ethics and chartered accountants have to follow these ethics, but why should chartered accountants have to follow these ethics? What is the need for these professional ethics? Let us see that. First of all, public will have lot of trust on the profession of chartered accountancy, correct or not? Because chartered accountants will give various advices related to financial aspects, correct? Finances of companies, public, will be handled by the chartered accountant. So public, they will repose a lot of trust on the services that the chartered accountant provides. Now, to uphold that trust, that means to keep that trust as it is, chartered accountants must be ethical. If a chartered accountant he himself is not ethical, then how can public place reliance on the work that the chartered accountant provides? How can public place reliance on the services that the chartered accountant provides? Understanding? So it is very much important for the chartered accountants to be ethical, so that the trust that the public are reposing on the chartered accountants will be upheld. Understood? Next, enhance confidence of users. Of course, if the chartered accountants are ethical, more ethical, they are having integrity, they are maintaining confidentiality, they are behaving professionally, in such a situation the confidence of users on chartered accountant will increase, correct or not? So that is also one of the reason why you have to follow professional ethics. Understanding? Next, code of ethics issued by ICAI. Of course, ICAI, our mother institute, has told the chartered accountants to follow code of ethics. Since our ICAI has told, we must follow. What happens if we don't follow? There is something known as the disciplinary mechanism. So ICAI has established this disciplinary mechanism also. So if any chartered accountant doesn't follow this code of ethics, he will be punished by ICAI as per this disciplinary mechanism. We will be generally, this concept of disciplinary mechanism, it is there in the CA final level. Okay, in the CA final professional ethics chapter, we will be detailedly covering that entire disciplinary mechanism that has been established by ICAI. Getting it? So now you understood what is the need for professional ethics, why you should comply with the professional ethics, right? Yes. Next, coming to the concept of independence. See, about independence, already we have discussed some concepts in the previous chapter. In the first chapter, we have discussed about independence, if you remember. So we will be making some more discussions about independence here in this chapter. So what is meant by independence? Independence means judgment not subordinate to wishes of others, right? So we have discussed this definition in the previous class. Whatever the decisions that the chartered accountant take, that should not be in favor of the will and wish of a third party or the management. Understanding? Next, perspective of independence. So there are two perspectives of independence. What are those two perspectives of independence? Firstly, independence of mind and independence in appearance. What is meant by independence of mind? Independence of mind means actually you are independent. Okay, actually you are acting independently, that is known as in mind actually you are independent. And independence in appearance means, what is meant by independence in appearance? So when a third party looks at the relationship between chartered accountant and the client, okay, when the relationship between chartered accountant and client is looked by a third party, third party should feel that yes, this chartered accountant is independent of this company. So such a feeling this third party has to get. So that is known as independent in appearance. So tell me whether it is sufficient if chartered accountant is just independent in mind and not independent in appearance, or should he both independent, should he maintain independence of both mind as well as appearance? Tell me, tell me in the comment section. Of course both are required, right? Chartered accountant has to be independent in mind as well as independent in appearance, right? Yes. Now there are certain threats to independence. What is meant by threats to independence? Threats to independence means, what is meant by threat? Threat means something that will prevent the chartered accountant from being independent. Yes, he should comply with both independence in mind and independence in appearance. So threat means, threat means something that will prevent the chartered accountant from being independent, right? So that is known as threat. So basically there are 5 threats to independence. What are those 5 threats to independence? We will discuss one by one. Firstly, self interest threat. Self interest threat means, see, I'll give you an example. So chartered accountant has invested in the shares of the company, and he is also acting as auditor of the company. Now he is having some financial interest in this company, and he is also acting as auditor of company. Now tell me, in this situation will he be able to act independently? No, he cannot act independently because he is having a certain interest in the company, which is financial interest. So mostly this self interest threat will be in terms of financial. Okay, in financial terms, this self interest threat will arise. Another example, let's say for example there is a chartered accountant. The total turnover of this chartered accountancy firm is some 4 crore rupees. Now of these 4 crore rupees, 3 crore is coming from only one client. From single client 3 crore is coming, and balance 1 crore is coming from remaining all other clients. That means here this chartered accountant is dependent on this single client for lot of portion of his fees. So this also you will call it as self interest threat. Getting it? Next, self review threat. What is meant by self review threat? Simple. If chartered accountant he himself prepares the financial statements and he himself audits those financial statements, then you will call it as a self review threat. Correct or not? You are reviewing your own work. When you are reviewing your own work, can you be independent? If there are any misstatements in that financial statements, can you bring them to the notice of management? No, right? So self review threat will also prevent the chartered accountant from being independent. You cannot review your own work. Next, advocacy threat. What is meant by advocacy threat? See, advocacy threat means you are promoting your client. You are promoting your client to such an extent that the public are feeling that the auditor and the client, there is no objectivity in this relationship. Like that the public are feeling the objectivity is compromised, the integrity is compromised. Okay, like that the public are feeling by seeing the way how you are promoting the client. In such a situation you will face advocacy threat. Example, yes, promoting the shares of the company is best example for advocacy threat. Next, familiarity threat. Familiarity threat means, what is meant by familiarity threat? You have become very familiar with the client. You have been acting as auditor of that company for the past 15 years, for the past 20 years. Then you have developed a relationship with the client, and you have developed a huge relationship that if there are any misstatements in the financial statements of the client, and client comes to you and says that auditor, please ignore these misstatements in the financial statements, then because of the relationship that you have with your client, you are not able to say no to the client. Okay, so in this situation also you are not able to act independently. So that is a familiarity threat. Yes, long relationship with the client. Next, intimidation threat. Intimidation threat means, intimidate means threatening. So client is threatening the auditor, saying that, see auditor, if you give qualified opinion, I will remove you from the position of auditor. Okay, or client is saying, yeah, sympathize towards the client. That is familiarity threat. So intimidation threat means client threatening the auditor. So example, let's say for example, the auditor is having just 1 year experience. Okay, 1 year experience auditor is having, recently qualified chartered accountant. He has been appointed as auditor of the company, and this company is in existence for the last 30 years. 30 years industry. Okay, now there is a particular accounting treatment. Company has done the accounting treatment of a particular item in a particular manner. Auditor is saying that, company, that is not the proper accounting treatment. As per accounting standards, you have to treat it like this. Now company is saying to the auditor, are auditor, I am doing this same treatment for the past 30 years. You have come just now, just 1 year experience. What do you know? Okay, I have 30 years experience. Like this the company is saying. Now because of the experience that the company is having, auditor might have to say okay to the company. So this also comes under intimidation threat, where client is intimidating the auditor with his experience. Understanding? Next, okay sir, there are these 5 threats to the independence. Knowing that there are these 5 threats to the independence, will the auditor be silent, or will he take any action to remove these threats? Of course auditor will take some action, right? So how to deal with these threats? There are 3 options available to the auditor. First of all, completely eliminate the threat. Let's say for example, you are having some self interest threat. You have invested in the shares of company. Now the first option that is available to you is, you completely eliminate that threat. That means you completely sell the shares that you have in the company. Then the threat will be eliminated. You will not have interest in the company. So that is the first option, which is elimination of threat. Sometimes elimination of threat might not be possible. So if it is not possible to eliminate the threat, then at least to put some safeguards to reduce the threat to an acceptable level. Now what is meant by safeguard? Let's say for example, familiarity threat. You have got a good relationship bonding with the client. Now you have become familiar with the client. So you cannot reject the audit of client, right? You cannot completely eliminate that threat, because client is giving you fees. When you are getting fees, why will you say that I will not do your audit? You cannot say that, and you will not say that, of course. So you will implement a safeguard. What safeguard you can implement? What safeguard you can implement to overcome that familiarity threat? Answer is rotation of auditors. So rotation of auditors means not the external auditors, other auditor you will apply within the firm itself. Let's say there are three chartered accountants in the firm, Mr. A, Mr. B, Mr. C, in the audit firm. In the first 2 years, Mr. A will be engagement partner for that company. Next 2 years, Mr. B will be there. Next 2 years, uh, Mr. C will be there. Like this, you rotate that audit, you rotate the engagement partner within the firm itself, so that you can reduce the familiarity threat to at least an acceptable level. Understanding? Next, finally, if at all it is not possible to eliminate the threat, it is not possible to implement the safeguards, then the only option that is available is to desist from the task or do not accept that engagement. Understanding? Yes, switching the partners. The correct term is switching the partners, not rotation of the auditors. You can say as switching the partners. Again, rotation means that Companies Act concept might come. So, better to say as switching of partners. Okay. Yes. So, if it is not possible to eliminate or implement safeguards, then desist. Better not to accept that work. Better to reject that work. Understanding? That is withdrawal from the engagement. Yes. Next, professional skepticism. What is meant by professional skepticism? Already we have discussed yesterday. So, professional skepticism means being alert, having questioning mind, and critical assessment of audit evidence. All these three comes under professional skepticism. Yesterday we have also seen the difference between professional skepticism and the professional judgment. Remember that difference between professional skepticism and professional judgment. Now, here, being alert to possible misstatement means what could be some of the situations for which you have to be alert. First one, contradicting evidence. Contradicting evidence means you have sent external confirmation. In the external confirmation that you have sent to the debtor is replying that I have to pay 2 lakhs to the company. But in the sales invoice that you have raised on that debtor, it is showing as 3 lakh rupees. Now, if you see here, one evidence is contradicting with the other evidence. So, you have to be alert to these kind of situations. Understanding? Contradicting evidence means that one evidence is contradicting the other. Next, questions about reliability of documents. So, when the management has submitted you some documents, you should be very alert to see whether these are real documents or these are forged documents, fake documents. Okay, you should be very alert to that. And possibility of fraud. So, throughout the audit, you have to be very alert to check whether there is any fraud in this area, whether there is any fraud in this area. Okay, you have to be very alert with respect to fraud. And circumstances suggesting need for additional audit procedures. So, you should also see whether there are any special circumstances, like let's say for example, during the year company has acquired another company. Okay, so company has acquired another company, you will call it as acquisition or merger, right? So, in such a situation, you have to be very careful whether the assets of that other company has been properly brought into your books of accounts, whether that assets have been properly valued in your books of accounts. So, in order to audit that acquisition, you have to perform certain special audit procedures, correct or not? So, you should also be alert to certain special situations to check whether any special audit procedures have to be performed for that situations. Got it? So now we have completed discussion with respect to the first portion, that is ethics. Let me know if you have any doubt with respect to the content that we have discussed till now. I guess there are no doubts. Next, we will start with SA-210. So, in the yesterday's class, we have discussed SA-200. Now SA-210, what is this SA-210? Agreeing to the terms of audit engagement. Now, before starting the audit, before accepting the audit, you will enter into an agreement with the client, right? What is the technical name that you give for that agreement? You will call it as engagement letter. Now, whether engagement letter is mandatory, what should be the terms and conditions of this engagement letter, whether you have to give engagement letter each and every year, all these aspects with respect to engagement letter we will be covering here in SA-210. Getting it? Yes sir. Let us start the discussion. So the standard deals with when to accept or continue the audit engagement. So basically this SA-210 you can divide it into three parts. Okay, first part we will be covering whether in deciding whether to accept this engagement or not to accept this engagement, what aspects you have to see. First of all, there should be preconditions should be present, and there should be common understanding of the engagement terms. Okay, so these two things should be there for the purpose of accepting the engagement. Preconditions means conditions that should be present before accepting the engagement. What are those preconditions? So if you see preconditions, what are the preconditions that the auditor has to check before accepting the engagement? First of all, the applicable financial reporting framework should be acceptable to the auditor. That means, example for financial reporting framework, accounting standard, Indian accounting standard, right? Yesterday we have discussed. Now, client has prepared their financial statements using accounting standards, but that client is a listed company. For the listed companies, Indian accounting standards are applicable, correct or not? Now, in this situation, if that client comes to the auditor and asks the auditor to audit their financial statements, will the auditor accept this engagement? He will not accept this engagement because one of the precondition is not present. That is, financial reporting framework is not acceptable, correct or not? Entity has to prepare as per Indian accounting standards, but it has prepared as per accounting standards. So the first precondition is not there. If the precondition is not there, auditor will not accept the engagement. Next, another precondition. Auditor has to get a confirmation from the management stating that management will discharge all their responsibilities. What are the responsibilities of management? See, management understands and acknowledges its responsibility for preparation of financial statements. So management should agree that they will prepare the financial statements. Even internal controls they will only establish, like this management should agree, and management should also say that we will provide unrestricted access to all the books of accounts. We will also provide additional information and explanation that you ask to us, and we will also provide unrestricted access to all the employees and other persons in the organizations, so that you can ask whatever questions you wanted to ask them. Understanding? So management should agree for all these things. So this is another precondition that should be present. So if these two preconditions are not present, will auditor accept the audit engagement? No, auditor will not accept the audit engagement. See, provide auditor with access to all information, additional information requested, unrestricted access to persons in the entity to obtain audit evidence. So that is the first part. We have completed when to accept the audit engagement, when to accept or when to continue the audit engagement. Next, we will be discussing audit engagement letter. With respect to the audit engagement letter, we will be covering three aspects. What should be the content of audit engagement? So what should be written in the audit engagement letter, that we will see. What should be the format of audit engagement letter, and change in the terms of audit engagement letter. These three aspects with respect to audit engagement letter we will be covering. First aspect, audit engagement letter means, of course, it is a agreement between auditor and management about the terms of engagement. Now, what terms will be included in this audit engagement letter? All the basic terms like objective and scope. Objective means purpose. What is the goal of objective? We have discussed what is the goal of audit. We have discussed in SA-200. What is the objective of auditor as per SA-200? to obtain reasonable assurance that financial statements as a whole are free from material misstatements, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether financial statements has been prepared as per applicable financial reporting framework or not, right? This is the objective. That entire objective you will copy paste in the engagement letter. That is the first thing that will be there. And also scope also we have discussed in the first chapter. What is included within the scope, what is out of scope of the audit, that also we have covered in the previous class. So objective, scope you will write in the engagement letter. Next, responsibilities of auditor. What are the responsibilities of auditor? To conduct audit and express opinion thereon. That is the responsibility of auditor, right? That you will write. Next, what are the responsibilities of management? Just now we have seen management is responsible for preparing financials, establishing internal controls, providing auditor with all the information, unrestricted access to employees. All this comes under responsibilities of management, which you will list down in the terms of audit engagement letter. Next, identification of applicable financial reporting framework. See, in the engagement letter itself, you will clearly mention as per which, for this company, which financial reporting framework is applicable, and as per which financial reporting framework they have prepared the financial statements. That you will clearly mention in the engagement letter. Why? Because while saying, company might say that, sir, for us Indian accounting standards are applicable, we have prepared our financial statements as per Indian accounting standards. Okay, since company is listed and they have prepared as per Indian accounting standards, I can accept the audit engagement and I will accept the audit engagement. After accepting the audit engagement, if I go and see their financial statements are prepared as per accounting standards, now if I question the management will say that, sir, we said that we have prepared as per accounting standards only, before only we said, like that they will say. So in order to avoid such a kind of situation, in the engagement letter itself you will clearly mention that management has prepared and management has also told that they have followed so and so financial reporting framework, so that there will be no confusion. Understanding? Next, form and content of reports to be issued. So for this audit, what type of reports I have to issue, whether CORO is applicable, whether report on internal controls or financial reporting, whether that report is applicable. Okay, all these things. So based on the types of reports that are applicable for this engagement, that type of audit procedures I will perform. So you will also mention the form and content of the reports that has to be issued. Now you can get a doubt, sir, what should be the content of audit report? That auditor will know only after doing the audit. Correct or not? Only after doing the audit you will get to know what will be the content of the audit report. Without doing the audit, how can you know what will be the content of audit report? But this engagement letter is being prepared at the start of the audit. Now at the start of the audit only, how can I say what will be the content of my report, what will be the content of my audit report? How can I say in the engagement letter? You cannot say exactly, right? But you will have a brief idea, because as per SA-700 there is format of audit report. So what you will mention that you will tell to the management, this will be my brief format and content of audit report, which is subjected to change after the audit is completed. You will mention this particular point in this engagement letter. Understanding? Yes. So that will be the terms that will be included in the engagement letter. Now management is requesting you to change the terms of engagement letter. With respect to this second one, form of engagement letter, of course it should be in written format, right? And change in the terms of audit engagement letter. So you have accepted the engagement. After accepting the engagement, management came and management told that, auditor, we wanted to change the terms of audit engagement letter. Can auditor accept for that change of terms, or should auditor not accept that request of the management? Tell me. The answer is, it depends. Auditor will first of all ask, acha, you wanted me to change the terms of audit engagement letter. Why? What is the reason? Like this, auditor will ask the management. Management will say, they will give some reasons. Now auditor will see whether the reasons given by the management are reasonable or not. If the reasons given by the management are reasonable, then he will agree for the change. If the reasons given by the management are not reasonable, then he will not agree for the change. Now, what is meant by reasonable? Only in two situations it will be considered that management, whatever the management has told, those reasons are reasonable. Only in two situations they will be considered. What are those two situations? Change in the entity's requirements. So earlier, bank has asked the company to submit audited financial statements. Bank manager told the company, in order to give you loan, we wanted audited financial statements. So company came to the auditor and said, auditor, our bank is asking audited financial statements. You urgently conduct the audit of our company. Auditor started the audit. So in the engagement letter, it is written that audit will be conducted, reasonable assurance will be provided. Like that, the engagement letter is drafted. After starting the audit, after some 3 or 4 days, bank manager again called the company's management and told that, "Arey company, by mistake I told that we require audited financial statements. Audit is not required. Just a review is sufficient." Like this, bank manager is now changing the requirements. So, since bank manager asked that company to just submit reviewed financial statements, here the requirement of the entity has changed. Correct or not? Let's say this is not a company, this is a partnership firm. Because for the company, audit is mandatory. Whether the bank requires or not requires, audit is mandatory for the company. Let's say this is a partnership firm. Understanding? So now the requirements of this entity has changed. Since the requirements of entity has changed, this will be considered as a reasonable justification. The reason given by the management will be considered as reasonable. Another situation when it will be considered as reasonable: misunderstanding of nature of service. So earlier, management has requested the auditor to conduct the audit. But audit means what? In previous class we have discussed. Audit means, in audit you will provide reasonable assurance, right? In case of review, you will provide limited assurance. Management, they don't know all these definitions. Audit means reasonable assurance, review means limited assurance. All these things they don't know. They just know one term, audit, and they told the auditor, you conduct the audit. So auditor, what he will do? Audit means reasonable assurance I have to provide, so I have to perform all the procedures. He started performing the procedures, and management felt, why auditor is performing all these procedures? I doesn't want this this reasonable assurance, high level of assurance. I don't want. Just certain amount of assurance is sufficient for me. Like this, management is thinking and went to the auditor and said to the auditor, I don't want a high level of assurance. Just limited assurance is sufficient for me. Why are you performing all these audit procedures? Then auditor said, "Arey management, you told me you wanted audit. Audit means high level of assurance. If you have used the word review, I would have conducted limited review, limited assurance." Now a management came to know about those definitions. So there is a misunderstanding that has happened here. So because of misunderstanding, management is requesting the auditor to change in the terms of audit engagement. That will also be considered as reasonable justification. Understood? Clear? Any doubt with respect to this? No doubt, right? Reasonable justification understood. So only if there is reasonable justification, change in the terms of audit engagement will be allowed. So yes, there is a reasonable justification, then auditor will accept the change of terms. Once you accept the change of terms, generally what will happen is, so auditor has started with audit in our example, right? He is doing the audit. Suddenly in middle, management came and told for change of terms, right? Told for change of terms, requesting for review. Now from this point onwards, auditor will do review. Now here, for the review, some of the procedures that you have performed during the audit might be useful. Correct or not? For the review that you are going to perform now, some of the procedures that you have performed during the audit might be useful to you. So you have to check that whether some of the procedures that I have already performed, some of the work that I have already performed, can I use that work now in the review? Okay, work performed till the date, can I use that? Is it relevant for me? You have to check that. Understanding? Next, legal or contractual implication. So because of this change in the terms of audit engagement, what contractual implications I will have? Should I inform about change in the terms of audit engagement to any external authority? Is there any such requirement on me? You need to once check that. Next, report shall not refer to original audit engagement. So after change in the terms, you are conducting review. After review is done, you will give review report. So in the final review report that you give, you should not make any reference to the audit that you have conducted initially. Understanding? So that's what they are saying. Report shall not refer to original audit engagement that you have conducted before the change of terms. Clear? Yes. Next, another important point, we have seen the terms of audit engagement. What terms and conditions should be there in the audit engagement? We have seen. Just a second. Sir, restriction on scope of audit imposed by management is also considered as change in the terms of engagement. No, restrictions on the scope imposed will not be considered as change in the terms of engagement. We have separate discussion on that. See, limitation on scope of engagement, we will discuss it here. Okay, the doubt that you have asked, we will be discussing it. So note, if law or regulation prescribes above terms, auditor need not record them in writing. Okay, so if these terms and conditions already law has specified in the law, in such a situation you need not again write them in the engagement letter. Whatever is specified in the law, you can just make a reference to that terms. Understanding? Next, limitation on scope prior to the engagement acceptance. So limitation on scope means, what is meant by limitation on scope? So management is saying that, auditor, you should not attend physical inventory verification. Auditor, you should not send external confirmation to the debtors. Like this, management is restricting the scope of audit. Okay, now if this restriction, or you can say limitation on scope, limitation on scope, if it is imposed by the management before accepting the engagement, then auditor will better not accept the engagement. If after accepting the engagement, if management is restricting, putting limitations, then as said by Sambavaleti, it can be considered as a restriction, it can be considered as a request for change in the terms of audit engagement. Correct or not? So if this limitation on scope required by the management after the audit has been accepted, it can lead to request for change in the terms of audit engagement. Understanding? Now if that limitation has been put before only, means you will straight away not accept. You will first of all check management, why you are putting these limitations, you please remove these limitations. Like this you will ask. If they are not willing to remove the limitations, you will not accept the engagement. If you accept the engagement with that limitations, you will be ended up giving a disclaimer of opinion. Okay, in such a situation, better to not accept engagement. Correct or not? You accept the engagement and give disclaimer of opinion. Disclaimer means what? Disclaimer means not claiming any opinion. Correct or not? Disclaiming. So instead of accepting and not claiming any opinion, better to not accept engagement. Correct or not? So if before only it happens, you will not accept the engagement. See, limitation on scope prior to engagement acceptance. Limitation will result in auditor disclaiming an opinion and shall not accept such an engagement. If at all in this situation, after you have accepted the engagement, management put limitations, then you will request the management, you please remove the limitations. Because of your limitations, I am having to give a modified opinion or a disclaimer of opinion, you please remove the limitations, then I will give unmodified opinion. Management is not removing the limitation, then you will check whether it is possible to withdraw from the engagement. If it is not possible to withdraw from the engagement, you will continue the engagement and you will give disclaimer of opinion. Understanding? Clear with this point? Any doubt over here? Any doubts? You will check whether law is allowing you to withdraw or not. Basically, in some situations, what happens is, if you see SEBI LODR regulations, in case of listed companies, what SEBI says, there will be first quarter, second quarter, third quarter, and fourth quarter. For each quarter, auditor has to conduct a limited review. Right now, auditor has conducted limited review for first quarter. Auditor has conducted limited review for second quarter, and after conducting limited review for second quarter, within 45 days, not after conducting a limited review, after completion of second quarter, within 45 days, auditor wants to resign from the entity, auditor wants to withdraw. In such a situation, auditor has to complete limited review of the second quarter, only then he has to withdraw. If at all auditor wants to withdraw after completion of 45 days from the end of second quarter, in such a situation, auditor has to conduct a limited review of second quarter. He should also conduct a limited review of third quarter, and only then he can withdraw. Understand? These are the limitations put by SEBI if you want to withdraw from the engagement. Let's say auditor has conducted limited review of first quarter, second quarter, as well as third quarter, and now auditor wants to withdraw. In such a situation, SEBI says that you cannot withdraw just like that. You should also conduct limited review of fourth quarter. You should also conduct the statutory audit of complete financial year. Only after that you can withdraw. Like this, some laws and regulations might put limitations on the auditor from withdrawing from the engagement. So auditor, before withdrawing, he has to check whether law and regulation is permitting me for withdrawal or not. Understanding? Next, coming to the concept of recurring audits. What is meant by recurring audit? So, in the first year, Mr. A has conducted audit of the company. In the second year also, he only doing the audit. Mr. A only doing the audit. In such a situation, second year audit will be treated as recurring audit for Mr. A, because first year also he only conducted. Let's say, for example, in the third year, Mr. B has conducted the audit, and again in the fourth year, again Mr. A has been appointed as auditor. Now tell me, in this situation, will the fourth year audit will be initial audit or recurring audit for the Mr. A? You tell me this answer. Meanwhile, sir, if management impose limitation, auditor reject the engagement or ask the management to acceptable level. What is acceptable level? Because in 1MTP this type of question was asked, still it's confusing. Bringing the limitation to acceptable level, auditor will see. Let's say, for example, the situation is, I'll you keep on thinking about this. Once I'll explain this and I'll come back to there. So now, limitation. Here, let's say for example, management is restricting the auditor to send external confirmation. Okay, management is restricting the auditor to send external confirmation to the debtor. Okay, you are not able to send external confirmation, because of that you are not able to obtain audit evidence. Here you will check whether you can perform alternate audit procedures, whether you can perform alternate audit procedures, whether by performing alternate audit procedures can you obtain audit evidence about that debtor. Like, you will check the sales invoice. So when you have made sales, a sale invoice will be there. Through sale invoice only debtor will arise. So if sale invoice is there, it will give you a proof that yes, that debtor is actually there. And you will check what is the amount in that sale invoice. The amount is some 50,000 and debtor balance also showing 50,000. So even though management is putting a limitation on you, you are able to obtain audit evidence by alternate audit procedure. So you will not withdraw in this situation even if management is putting limitation. Understanding? So if management is putting limitation, before rejecting, you will see whether alternate audit procedures or you can perform alternate audit procedures. Okay, you should check for alternate audit procedures, but not for that acceptable level. Okay, understood? Sambhavality. Here you should not see, you should not try to bring that limitation to acceptable level. Okay, you should try to check whether alternate audit procedures can be performed so that I can obtain same level of audit evidence. Understood? So now in this scenario, tell me whether the fourth year audit for Mr. A, will it be recurring audit or initial audit engagement? So of course it will be initial audit engagement, because in the previous year Mr. A has not conducted the audit, right? So now another question. In the first year, auditor has given engagement letter, right? In the first year, auditor has given engagement letter to the company. In the second year also, same auditor is doing the audit, right? Mr. A only doing the audit. Whether there is a requirement to give new engagement letter in the second year also, or can you use the same engagement letter that was given in the first year? Tell me whether there is necessity to give new engagement letter for the recurring audits. The answer is there is no straightforward answer. It depends. You have to check whether you have to give new engagement letter or you can continue that old engagement letter. On what points it will depend? See, on following points it will depend. Let us discuss. So recurring audits. Recurring audit means performed by an auditor over the years. Is new engagement letter required for all the recurring audits? It depends. See, following factors may make it appropriate to revise the terms. So if any of these situations are there, auditor has to consider giving a new engagement letter for the recurring audits. Understanding? So what are those situations? Let us see. Firstly, indication that entity misunderstands the objective and scope. So in the first year, auditor has given engagement letter and auditor felt that engagement management has not properly understood the scope of audit and the responsibilities of management. All these things management has not understood properly. Like this the auditor felt. In such a situation, in the second year, what the auditor will do is auditor will draft again another engagement letter mentioning clearly the scope and all the details very clearly, so that such a confusion will not arise to the management. So in such a situation, it's better to give a new engagement letter in the second year for the recurring audit. Next, revised or special terms. Of course, if the terms of engagement itself has been changed, let's say for example, in the previous year audit fees is 50 lakhs, in the current year audit fees increased to 70 lakhs, engagement letter has to be changed, correct? Because in the engagement letter you will be mentioning the audit fee. So if the terms of engagement itself has changed, then also you will give new engagement letter instead of continuing that same old engagement letter. Next, change of senior management. So in the previous year, the top level management, managing director, CEO, CFO, they have changed in the current year. In the current year, new CEO appointed, new CFO appointed. In such a situation, they might not be having knowledge of the engagement letter that was issued previously. So better to issue a new engagement letter in the current year also. Similarly, if there is a change in the ownership. Next, significant change in the nature or size of the entity's business. So in the previous year, the turnover of entity is just 10 crores. In the current year, turnover has increased to 1000 crores. So the way how you audit a 10 crore turnover company, the way how you audit a 1000 crore turnover company is different. So of course, the engagement letter has to be changed if the size and the nature of the company changes. Understanding? Next, change in legal or regulatory requirements. So let's say for example, a new accounting standard has been issued, and as per that new accounting standard, a new treatment has been prescribed for a particular area. Now since a new completely new treatment has been prescribed, there is a high possibility that management might commit some mistakes in making that accounting treatment. So in this year, you have to focus more on that particular area. So based on that, you have to change your engagement letter, correct or not? Yeah, new branches added will change the size of the entity. Next, change in the financial reporting framework. Previously, accounting standards are applicable. Currently, in the current year, it has become listed and Ind AS has become applicable. Then also, you have to change your engagement letter. Next, change in other reporting requirements. Other reporting requirements means in the previous year, Caro was not applicable, but current year, Caro has become applicable to the company, because in the previous year it might be a small company, and now it has crossed that limits which has been given. So so Caro has become applicable. Then you have to verify points of Caro also. So your scope has increased. If your scope increases, you have to change the terms of audit engagement and give a new engagement letter. Correct or not? So by now we have completed discussion of complete second chapter. So any doubts with respect to second chapter? Everything clear? Two minutes break. You can take break and continue. However, this is live now. You can just go back and come. Next, moving to third chapter. So what is this third chapter? So see, if you observe, in the first class we have covered 5 marks. In the second chapter, around 8 to 10 marks we have covered. So roughly 15 marks is covered. Again, another 10 marks we are going to cover chapter number 3. So once this chapter number 3 gets completed, roughly 25 marks we would have got completed. Sir, what should not be included when there is a change in audit engagement? What should not be included? There is nothing like you should not include these things in the changed audit engagement letter. You can include anything in the report. What should not be included when there is a change in the report? There is no such thing. The format of report, it is given as per SA-700 na. As per that SA-700, you will give your audit report whether there is a change in the terms of audit engagement or not. No change in the term audit engagement, that format will be as per SA-700. Pramod Balaji. There is no such thing that this should not be included if there is a change in the audit engagement. Acha, you are. Hmm. There is no such thing, Pramod Balaji. Sir, SQC, it's part of SQC, it's part of second chapter. No, no. See, in your ICI study material, they have given a different flow. If we follow that flow, it becomes difficult for us to understand. Basically, in our list of chapters, we will be covering SQC in the 10th chapter. Okay, audit quality will be covered in the 10th chapter. SQC1 and SA-220 both together we will be covering in the 10th chapter. Okay. Change in terms of, acha, huh, see, if there is, see, if originally you are conducting audit, now it is changed to review. In such a situation, for review, whatever the type of review report that you give, that you will give, you will not mention about audit in the review report. Understanding? Yes, yes. So if engagement is changed from audit to review, then in the review report you will not mention about audit. That point we have already covered. I have already explained you that. So see here, I have already told you, report shall not refer to original audit engagement. Okay, yes. So now starting with chapter number 3, which is audit strategy, planning and execution. So this is completely covered under SA-300. So if you observe, we are following the flow. So practically how the audit will be conducted, the same flow we are following. Understanding? We are not following the flow that has been given by the institute. Okay, so first of all, SA-200, the basics. Next, you will enter into engagement letter, SA-210. After yes, SA-300 only. After entering into engagement letter, you will start the audit. Before starting the audit, you will plan your audit, right? So planning is dealt by SA-300. Understanding the flow. So SA-300, planning and audit of financial statements. Now this audit planning, it generally involves the 3 stages. Not the audit planning, the audit involves 3 stages. Firstly, planning stage, execution stage and reporting stage. Planning stage we will be covering completely in SA-300. Reporting stage we will be covering in SA-700 series. The complete 700 series is there na, SA-700, 701, 705, 706, 710. That completely deals with reporting stage. And with respect to execution stage, all the remaining standards, the 315, 330 and 200 some standards and 500 series standards, all these standards they will deal with execution stage. Understanding? This is the division of standards between the stages of audit. And why to plan the audit? Tell me, why should you plan the audit? You have to plan the audit to conduct an effective audit in an efficient manner and also in a timely manner. See, to conduct effective audit in an efficient and timely manner, you have to plan the audit. Sir, what is meant by effectiveness? What is meant by efficiency? Any idea what is meant by effectiveness? What is meant by efficiency? So let's say, for example, effectiveness. Now you are preparing for your CA intermediate examinations, right? So let's say you have prepared for both the groups and you have successfully cleared both the groups, then it will be said that you are 100% effective because you have achieved your complete target. Let's say you are preparing both the groups, you cleared only one group, it will be said that you are 50% effective because you have achieved only half of your target. So effectiveness means achieving how much of your target. And coming to efficiency, what is meant by efficiency? Efficiency means, so there are two students, Mr. A, Mr. B. Both are preparing for CA intermediate students, CA intermediate exams. Both have prepared both the groups. A has prepared both the groups. B also prepared both the groups. Now A has took some 6 months time for preparing both the groups. B has took only 3 months. Within 3 months, he has prepared both the groups. Both of the students wrote the examinations and both of them has cleared both the groups. Okay, Mr. A has cleared both groups. Mr. B has also cleared both. Now, who will be said as more efficient? Mr. A is more efficient or Mr. B is more efficient? You will say Mr. B is more efficient because he has achieved the target with lesser resources, optimum use of resources. Understanding? So that is the difference between effectiveness and efficiency. Understood the difference between efficiency and effectiveness? Efficiency and effectiveness, yes. So why will you plan the audit? So by planning the audit, you can perform a effective audit in an efficient manner. So you can use less resources, less time, less staff for doing the audit if you properly plan it. Now what are the benefits of planning the audit? See, there are a lot of benefits of planning the audit, which are as follows. You can devote appropriate attention to important areas. You can focus on important areas and resolve potential problems. Potential means problems that might occur in future. Currently that problem is not there, but while planning you will analyze everything, and while planning you will get to know what type of problems can occur in the future. And for such potential problems, now only at the planning stage only you can design a solution. So planning will also help to resolve the potential problems. Correct or not? Yes. Next, properly organize and manage the audit engagement. Of course, if you have a proper plan, everything will be under your control. You will be able to properly manage the entire audit engagement. Correct or not? Yes. Next, selection of engagement team members. So at the planning stage, if you properly plan the audit, at the planning stage only you will get to know which area is more difficult to audit, which area is very easy to audit, in which area there is more risk of material misstatement, that is romum, in which area there is less risk of material misstatement. This you will get to know at the planning stage. By you will perform some risk assessment procedures also at the planning stage. Now if in a particular area romum is more, you will allocate more resources to that area. If in a particular area romum is less, that is risk of material misstatement is less, then you will allocate less resources in that area. So selection of engagement team, planning the audit will help you to select the engagement team members. So highly qualified article assistant you will allocate for high risk of material misstatement area. For low risk of material misstatement area, you will allocate recently joined article assistant. Understanding? So for that purpose planning will help. Next, direction and supervision of engagement team, coordination of work done by others such as experts. So all these are the benefits that you get because of properly planning the audit. Next, elements of planning process. So basically, if you see, there are two elements of planning process. First one is preliminary engagement activities. What are these preliminary engagement activities? See, about these preliminary engagement activities, we will also be discussing in SQC1. Okay, so if you see, one of the first of all, preliminary engagement means before starting the audit, you will perform certain activities. Okay, before starting the engagement, you will perform certain activities. They are known as preliminary engagement activities. What are they? Client acceptance and continuance procedure. So a client has come to you. Should you accept this client or should you not accept this client? How will you check that? In SQC1 we will see, you will check the integrity of the client, whether client is a fraudulent person, whether there are any fraudulent cases against the client, whether client is having utmost integrity or not, you will check. So if client is not having integrity, if he is lacking integrity, you will not accept the client, correct or not? So you will check integrity of principal owners of the client. Okay, you have checked integrity of principal owners of the client, they are fine, they are good people. You will also check whether your audit staff, the number of audit staff that are available with you, are they competent enough to do the work of the client? Are these audit staff having proper knowledge to perform the work? Only if they are capable of doing that work, you will accept the work, otherwise you will not accept the work, right? So you will also check competence of engagement team members. After checking competence of engagement team members, let's say you are having a good engagement team, they are very eligible for performing the SA-220. Yes, SA-220, no, SQC1. In SQC1 you have, and even in SA-220 also you have. See, whatever the 6 points that we discuss in SQC1, the same 6 points you will discuss in SA-220 also. Understanding? In both the standards, SQC1 and SA-220, these points are there. Understanding? Yes. So client is having integrity and your engagement team is also highly competent enough for doing the work. Next, you will see, if I accept this engagement, can I comply with the ethical requirements? Can I comply with ethical requirements if I accept this engagement? There is the integrity, there is confidentiality, there is objectivity, all these ethical requirements I should comply now. By accepting this engagement, will I be able to comply with these ethical requirements? That also I will see. Okay, compliance with ethical requirements including independence. Next, communication with the predecessor auditor. Predecessor auditor means previous auditor. In the previous year, some other auditor has done the audit of company, and in the current year you have been appointed as a auditor. Now in this situation, ICAI specifically says that you have to obtain NOC, no objection certificate, from the predecessor auditor before accepting this engagement. That also you will perform, you will communicate with the predecessor auditor. Understanding? Next, implication of current and previous audit matters. So if, let's say for example, in the previous year also you only audited this particular company, and in the previous year you came to know that in the area of sales there are a lot of misstatements that are present, and company has also done lot of manipulations in the previous year's financial statements. This you know, because previous year audit you only done. Now you are having a previous experience with this client. Now this client has again come to you in the current year for asking you to do the audit. Now before accepting the audit, you will check the previous year's implications. In the previous year I have faced all these difficulties now. Keeping in the keeping all those things in my mind, should I accept this client or better not to accept this client? So you will also consider implications of current and previous year's auditor engagements or audit matters. Understanding? Next, you will understand the terms of audit engagement. So these things comes under preliminary engagement activities, the activities that you will perform before accepting the engagement. Next, planning activities. Planning activities, what is this planning activities? See, under planning activities, three things will come. First one, you will prepare overall audit strategy, then you will prepare audit plan, then you will prepare audit program. Now what is meant by strategy? What is meant by strategy? Strategy answers two questions: what has to be done and when it has to be done. And strategy is not that much detailed, it is very brief. Okay, next, coming to the plan. Now in the strategy, you have decided what has to be done and when it has to be done. In the plan, in the audit plan, you will decide how it has to be done. Okay, in order to achieve that strategy, how you have to proceed, that will be dealt in the audit plan. So in fact, audit plan contains audit procedures. Audit plan contains audit procedures. Audit procedures are nothing but risk assessment procedures and further audit procedures. So plan contains the list of audit procedures and other audit procedures. Any other audit procedures that you want to perform, those things will be there in the plan. And plan will be very detailed when compared to the strategy. Okay, plan is more detailed than the strategy. And you should also remember that strategy is prepared first, and based on strategy, plan will be prepared. Strategy will provide a guidance on how to prepare the plan. Understanding? And you should also remember that both are interlinked. If strategy is changed, plan also changes. If plan changes, the strategy should also be changed. Understanding? Yes, strategy will set the scope and timing. Okay, timing means nothing but when, scope means nothing but what. So see, overall audit strategy, it addresses what and when of, and sets scope, timing and direction of the audit. Developing an audit plan. So in audit plan developing, you will address how and contains list of audit procedures. Plan is based on strategy. Next thing that comes is audit program. If you see, even audit program also contains a list of audit procedures only. Sir, then what is the difference between audit plan and audit program? See, in case of audit, there will be audit team. Let's say there are three people in the audit team. One, two, three people in the audit team. Now what areas has to be audited by Mr. A? For that areas, what audit procedures he has to perform? What areas Mr. 2 has to perform? And for that, what audit procedures Mr. 2 has to perform? And what audit areas Mr. 3 has to deal? And for that, what audit procedures Mr. 3 has to perform? So member wise division will be done, and audit program will be given to each member. So in the audit program, list of audit procedures that has to be performed by each audit team member will be there. Okay, so audit program will be unique for each team member. Audit program also contains a list of audit procedures only, but those list of audit procedures that should be specifically performed by that particular team member will be there in the audit program that you give to that member. Understanding? Whereas plan contains all the audit procedures that has to be performed. Getting it clear? Any doubt with respect to audit plan and audit program? See, if you see, detailed step-by-step procedure on how to audit an item given to assistant. Okay, Next, we will start with discussion of overall audit strategy. So benefits of overall audit strategy. By preparing overall audit strategy, what benefits you will get? See, there is also benefit of audit planning. There is also question related to benefits of audit strategy. Here you need to remember that the benefits that the strategy will offer will be from the point of view of resources. Okay, all the benefits that this strategy will be offering will be from the point of view of resources. So employment of qualitative resources, allocation of quantity of resources, timing of deployment of resources, management of resources. So all the benefits with respect to resources you will get with the help of auditor strategy. And what factors you should consider while developing a audit strategy? So you should consider the characteristics of the engagement. Characteristics of engagement means, one of the example for characteristic is, what is the financial reporting framework that has been followed for the preparation of financial statements. That is one of the characteristic of the engagement. So while developing audit strategy, you should consider the characteristics of engagement, because based on the characteristics of engagement, you will prepare your audit strategy. Yes, yes, you are correct. Next, ascertain the reporting objectives. So another thing that you need to consider for preparation of overall audit strategy is, what are the reporting objectives of auditor. So is it sufficient if I just give audit report, or should I also give caro, and should I also give report on internal control over financial reporting? So what are my reporting objectives, and within which time I have to give these reports? Is there any timeline within which I have to give the report? Based on that also your audit strategy will change. So you should also consider that as well. Next, factors that are significant in directing the engagement team's efforts. So let's say, for example, in a particular area, the risk of material misstatement is more. If the risk of material misstatement is more, the engagement team's efforts should be directed more in that area. Correct or not? So while preparing the strategy, you have to give more importance for that area where romum is high. Correct or not? So you should also consider factors that are significant in directing the engagement team's efforts. Next, considering result of preliminary engagement activities. Preliminary engagement activities means, already we have discussed client acceptance, and continuance procedure, whether you will be able to comply with ethical requirements or not. So while performing the preliminary engagement activities, the results of such preliminary engagement activities also you should consider while developing audit strategy. Let's say, for example, as part of preliminary engagement activities, you came to know that client is doing some fraudulent activities in some areas. Client is committing some frauds. Then what you will do while preparing your strategy, you will focus more on that areas. Correct or not? So you should consider that. Next, nature, timing, extent of resources necessary to perform the audit engagement. Of course, the engagement will be discharged by the article assistants and the paid assistants. They are nothing but your resources. So which type of resources are required, and how many resources are required, and at what time I should deploy those resources, that also you should consider while preparing the audit strategy. So these are the 5 factors that you should consider while preparing audit strategy. Clear? Any doubt? You'll also consider, yes, that is one of the example. Next, contents of audit plan. So I told you what will be there in the audit plan. There will be audit procedures. What are the various audit procedures? Risk assessment procedures, further audit procedures, right? We will be discussing in depth about that risk assessment procedure, further audit procedure in the next chapter, in the fourth chapter. Basically in SA-315, 330, there we will be discussing about those risk assessment and further audit procedures. So audit plan will contain that only: planned risk assessment procedures, planned further audit procedures, and any other planned audit procedures. Those things will be there in the audit plan. Next, what documentation auditor needs to maintain? Of course, audit strategy has to be documented by auditor, and even plan has to be documented by auditor. And tell me, once auditor has prepared audit plan and audit strategy, can that audit plan and strategy be changed by the auditor? Can the auditor change audit plan and strategy, or should it be fixed? Let me know in the comment section. The answer is yes, it can be changed as the audit progresses, right? So you should also document significant changes made to that audit strategy or plan and reasons for such changes. Understanding? Yes. So all those things you need to document. Next, some more points with respect to audit strategy and audit plan. The relationship between these two things we will see. So, relationship between audit strategy and audit plan. Are these both related? Audit plan and strategy? Of course, they are related. So, strategy is prepared before the plan, right? Strategy is prepared first, then the plan will be prepared next. Plan is more detailed than the strategy, correct or not? Strategy will be just, it will be briefly discussed, but in the plan, in detail, how to achieve that, how to perform that audit procedure, what audit procedure has to be performed, detailedly it will be written in the plan. Next, strategy and plan are interrelated. Of course, interrelated, because you will prepare your plan based on strategy only. If strategy changes, plan also changes, right? Strategy provides guidelines for developing the plan. Next, whose responsibility it is for preparation of audit plan and strategy? Will the management prepare audit plan and strategy? No. Auditor will prepare audit plan and strategy, right? So it is auditor's responsibility for preparation of audit plan and strategy. Engagement partner and other key members should be involved in the planning. So while developing the audit plan and audit strategy, engagement partner, of course, he will involve in developing the plan. Along with engagement partner, certain key engagement team members will also involve, right? Next, auditor may discuss planning with entities management. Now, auditor, he has developed a audit plan, audit strategy. Can he communicate his plan with the management? If he communicates his plan with the management, his entire audit will get to know to the management what areas he is going to audit, how he is going to audit. All these things management will get to know. What happens if management get to know all these secrets of the auditor, about how the auditor is going to audit? Management will take care that the frauds that they have committed will not be identified by the auditor, correct or not? So if auditor communicates his plan to the management, there is this disadvantage. We will see from other side. Auditor has to do the audit. For doing the audit, auditor needs certain information. Who will provide that information? Management only will provide that information. If auditor doesn't tell to the management which area he is going to audit, how can management provide that information? Management cannot provide that information until and unless auditor communicates his plan and strategy. So now, if auditor communicates plan and strategy, there is one problem. If auditor doesn't communicate plan and strategy, there is another problem. So in this situation, what the auditor has to do is, auditor has to communicate plan and strategy, but he has to take care that effectiveness of audit will not be compromised. Understanding? He has to take care that management will not get to know all the audit procedures that he is going to perform. Understanding? You should not give detailed plan. Got it? Yes. Next, Can the plan strategy be changed during the audit? Yes, of course it can change. Auditor should update and change the audit strategy and plan during the audit. Some of the factors to be considered for changing the plan and strategy: result of unexpected events, change in the conditions, audit evidence obtained. So new audit evidence that the auditor has obtained, suggesting existence of some more misstatements than the auditor has expected. So this will also lead the auditor to change his plan and strategy so as to cover more areas in the audit. Next, change in law, notification, government policy. So all these are some of the examples which will lead to change in audit plan and audit strategy. Getting it? Next, benefits of documentation. What benefits you will get because of audit documentation? Of course, documentation will act as record of key decisions, record of nature, timing, extent of risk assessment procedure. So what risk assessment procedures you have performed, when you have performed, how many you have performed, all that record you can maintain if you document, right? And record of reasons for changing the strategy and plan. So if at all you have changed the strategy and plan, in future, by seeing the documentation, you will get to know, why did I change my plan, why did I change my strategy? That reasons you will get to know if you properly maintain the documentation. So that is the benefit that the auditor will get because of audit documentation. Next, so there ends the discussion about audit plan and audit strategy. Now we are left with audit program. So I already explained you what is meant by audit program. So audit program also contains a list of verification procedures. So one audit program not practicable for all businesses. So tell me, can auditor prepare a standardized audit program and can he use it for all the businesses, for all the audits that he is going to conduct? No, because businesses vary in size, businesses vary in nature. Based on their size, based on their nature, you have to do the audit. So you cannot use the same audit program for all the audits, correct or not? So business vary in nature, size and composition, efficiency and operation of internal controls vary. So because of this reason, you cannot use the same audit program for all the businesses, right? Next, points to be considered in constructing audit program. So while developing the audit program, what points you need to consider? Let us see. Scope and limitation of assignment. So if you observe in the audit strategy, you would have written your scope of audit. So you need to develop audit program within the scope that has been set by the strategy, right? Next, written audit program. Of course, the audit program should be in a written format because you will be giving this audit program to each and every article assistant, right? Next, identify the best evidence available. So the audit procedures that you list down in the audit program should be in such a way that by performing that audit procedure, you will be able to obtain the best audit evidence that is available. Okay, the sufficient appropriate audit evidence you should be able to obtain by performing the audit procedure. Okay, such a kind of audit procedure you need to list down in the audit program. Understanding? Next, audit objectives for each area. Audit objective means purpose. See, the purpose of audit for each area will be different, correct or not? So if you are auditing the area of fixed assets, your purpose might be to check whether fixed assets are actually in existence, whether fixed assets have been properly valued or not. That will be your purpose. When you are verifying the area of sales, then your purpose will be whether entity has recognized only sales that have occurred in the current year. Entity should not have recognized previous year sales in the current year, next year sales in the current year, right? Your objective will be that, and you will also see that entity has recorded all the sales. So for each and every area, there will be a different audit objective. Based on the audit objective, you have to design your audit procedures in the audit program, correct or not? So you should also consider audit objectives for each area before designing the audit procedures. Clear? That is before developing the audit program. Next, possibilities of error. So you should also consider in which area there is a possibility of error. Based on that, you can design more audit procedures for that area in the audit program. Understanding? Understood these things? Next, there are certain disadvantages because of audit program. So what disadvantages this audit program will have? First of all, if you observe in the audit program, what the auditor is doing, auditor has given list of audit procedures and he is telling the article assistants, go article assistants, perform these audit procedures. Right now, because of this, what happens is article assistants might feel it interesting in the first audit, in the second audit, but as they keep on doing more and more audits, the work might become more mechanical. They might feel bored because they are performing the same audit procedures. Correct? So one of the disadvantage of audit program is work might become mechanical and it might become rigid and inflexible. Inefficient assistants may take shelter behind the audit program. Inefficient assistants may take shelter under the audit program is, let's say for example, in the audit program for verification of debtors, it has been written that you have to send external confirmation and obtain the evidence. That has been written as the audit procedure. Now article assistant, what he has done, he has sent external confirmation and the reply that he has received, he has kept in his audit file. That's it. Now it is not sufficient if you just obtain the external confirmation. You have to check whether the amount that is there in the external confirmation is matching with the books of accounts or not. Or this article assistant, he checked and he found that they are not matching. What if they are not matching? Let me keep in the audit file. He kept it. If they are not matching, what should you do? You have to further investigate whether amount that is shown in the external confirmation is correct or amount that is shown in the books of accounts is correct, or both is wrong. You have to investigate further. Now this article assistant, he didn't investigate further. When auditor asked, when the principal asked, array article assistant, why did you investigate further on this issue? Article assistant is saying, sir, it is not written in the audit program. In audit program, it is just written send external confirmation. I have sent external confirmation, taken external confirmation, kept in audit file. Like this, article assistants, inefficient article assistants might take shelter under the audit program, saying that this is not listed, this is not present in the audit program. Understood? Understood? Yes. And there can also be some type of article assistants who wanted to explore new things. So for such type of article assistants, if you give a list of audit procedures and tell them to perform these audit procedures, they will feel that their hands are tied up by the principal. So may kill initiative of efficient and enterprising article assistants. So that is also one of the disadvantage of audit program. Yeah. Once this is completed, we'll take the break. Another 5 to 10 minutes it will take. Okay. Next. Now, there are these disadvantages. How to overcome these disadvantages? How to overcome these disadvantages? See, to overcome these disadvantages, the principal, that is the main auditor, he has to properly supervise the work that is being done by the article assistant, that is imaginative supervision. Next, auditor must have receptive attitude. Even though in the audit program it has been said that these audit procedures has to be performed by article assistant, if article assistant has gone beyond the audit program and has performed more audit procedures, the principal should not restrict him. He should be receptive to the article assistants. If article assistants comes up with any new findings, new doubts, the principal should be receptive to them. Understanding? He should encourage the article assistant. Next, assistants should be encouraged to observe matters objectively. Objectively means based on facts. Next, what are the advantages that you get because of audit program? First of all, a clear set of instructions you will be able to give to the article assistant. If no clear set of instructions are given, each article assistant will do the audit as per his own way. So to avoid that, if you give audit program clear set of instruction, a written instruction will be, you will be able to give to the article assistant. That is one of the advantage of audit program. Next, total perspective of work to be performed. So article assistant or the paid assistant also will get a clarity or will have a idea what work I have to perform. So whatever the procedures that are there in the audit program I have to perform. So he will have a idea, clarity of work that he has to perform. Understanding? Next, avoids the overlooking of certain books and records. So if you don't prepare a proper audit program, there might be a chance that you might miss verifying some of the accounts, you might miss verifying some of the books, correct? So if you have proper strategy, plan and program based on that, you will be able to cover all the areas of the entity without missing anything. That is also one of the advantage. Next, responsibility for the work carried out by putting the signature. Now if you have given an audit program to the article assistant, once article assistant has completed all that audit procedures listed in the audit program, he has to put a signature at the end of the audit program, so that after 4 years or after 5 years, if any query rises with respect to that particular client, then the auditor, what he can do, he can go to the audit programs and check this area has been audited by whom. Acha, this article assistant has audited this area na. So this article assistant will have an idea of what is the issue that is involved over there. So you can contact that particular article assistant. So if at all that article assistant has not done that work properly, you can fix the responsibility on him, you can fix accountability on him, because he is signing the audit program, correct or not? In future he cannot escape that, no I did not perform that work, because he has signed it in the audit program that he has only done that work. Understanding? Yes. Next, control the progress of various audits. Of course, if you see, the auditor, he will not be doing only one audit simultaneously. A auditor will be handling 5 to 10 audit engagements. In each audit engagement, different audit team will be working. The auditor, the chartered accountant, he will be supervising these engagement teams. So if audit program is there, the auditor, the principal auditor, he will get to know in which audit engagement how much work is completed, still how much is pending. Okay, that idea can be attained by the principal auditor and guide for audits to be carried out. So all these are the advantages of audit program. Understood the advantages? Any doubts? Any doubts with respect to advantages of audit program? No, right? So finally we will be reaching the final concept, which is assistant to keep an open mind. Now you have given an audit program to the assistant, and you should not say that assistant you have to strictly follow this audit program. No, you should tell the assistant, see assistant, the list of audit procedures that are present here, you perform them. Along with these audit procedures, if you feel that some other audit procedures has to be performed, you perform that also. You keep open mind. Okay, you just don't get restricted to this audit program. Like this, you should encourage the article assistant to keep open minded. Understanding? Yes. See, assistant to keep open mind. Auditor develops a standard audit program to provide for minimum essential work. So what the auditor will do is, generally auditor will design a standard audit program. Okay, so generally 90% of the audit procedures that you have to perform will be common for all the entities. Just 10% of the audit procedures will vary. So covering all those 90% audit procedures, a standard audit procedure, audit program auditor will prepare, and based on the entity wise auditor will alter this audit program. Okay, as he gains experience, he will add more audit procedures to the existing audit program. And if he feels that some of the audit procedures that are there in the audit program are not at all required, then he will delete those audit procedures which are not required. Understanding? So this is how it will happen practically. There will be a standardized audit program that will be there. For that audit program, see, program may be altered as the experience is gained. Similarly, unnecessary procedures may be dropped off from the audit program. So, and finally, assistant should be encouraged to keep open mind beyond the program. Got it? So this is a complete discussion of SA 300, chapter number 3. So any doubts with respect to this particular chapter? No doubts. Jai Balaya. Jai Balaya. No doubts, right? So, shall I wind up this class? And tomorrow we will be again meeting at the same time with the fourth chapter. So, if you see, tomorrow it is very important chapter where we will be discussing the concepts related to risk assessment, risk of material misstatement, SA-315, SA-330, SA-450. Okay, all these standards we will be covering in the tomorrow's class. Okay, I will be winding up this session as of now. We'll meet you in the next session. Until then, take care.